The most important strategy, by knowing it, you can identify the important place of pain, and you can get important confirmation and trade with it. We know that when the price enters the suffering phase after correction or decline. First, the trader must recognize when the price trend will enter the trading range. Basically, the price must have at least 2 hits to the ceiling and 2 hits to the bottom. Otherwise, it can be expected that the price trend will have an upward or downward trend. Note that the price in the high time can be inside a TR or neutral trend, but the same price can have an upward and downward trend in the low time. When you as a financial market trader have recognized that the price range has started, we know that when the price enters the suffering phase after correction or decline. First, the trader must recognize when the price trend will enter the trading range. Basically, the price must have at least 2 hits to the ceiling and 2 hits to the bottom. Otherwise, it can be expected that the price trend will have an upward or downward trend. Note that the price in the high time can be inside a TR or neutral trend, but the same price can have an upward and downward trend in the low time. When you as a financial market trader have recognized that the price range has started, trade with market failure. The breakout trading approach is another way to profit from breakout market conditions. The idea behind this range trade strategy is to enter the market if the price breaks above or below the range. You enter the market in a losing direction. If there is a bearish breakout, you sell the pair. If a breakout is bullish, you buy the currency pair. You enter the trade with the assumption that the price will form a trend after breaking through the range. A valid trading signal of a range breakout is associated with high or rising trading volume. That way, you can use the volume indicator to confirm that the signal you're getting on the chart is a real breakout. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Range detector. This indicator detects and highlights intervals where prices are ranging and indicates breakouts by the color changes of the range extremities. It can be useful for identifying support and resistance zones and potential trend reversals. Order block detector. This indicator detects and marks order blocks, which are areas of high volume activity where market participants are accumulating orders on a lower time frame. It can be useful for spotting institutional buying and selling and anticipating price movements. Now, how to trade, we must first add Algo Lux indicator, range detector, and MACD to our chart, and after Algo Lux settings, hit 13, 1, and 200 respectively from first to bottom, and then go to trade. This strategy is one of the most important strategies. Is that first by identifying the important support and resistance ranges, then it tells you the turning points or the important secret of magical returns. These settings you put on this strategy will help FIBO and MACD a lot. Let's draw and then in which upward or downward trend, for example, the upward trend. When the price reaches the important support line or makes a pullback, we should know that this pullback that hits the line or the same range is the same hidden FIBO or golden box numbers. The price is in the area that can be shown now, that the blue line crosses the red line upwards, and in terms of price action, the new ceiling is higher than the previous ceiling in the upward trend, and those are important confirmations. It shows that the MACD lines are close to their histogram. That is, if the cross is close to this histogram, we can see the pump trend. A very important point that remains is that this strategy is better used in the time frame of 15 minutes and 30 minutes. All important strategies have been mentioned, and this is one of them, but in the time frame of 15. And the last important point is that trading volume in range trading. The second most important indicator to recognize a neutral market is the overall trading volume, which usually remains constant due to the muted sentiments of both buyers and sellers to trade during this period. Among the volume determining indicators is the OBV index, which evaluates buying and selling pressure. Assessing volume in trends can help validate patterns and whether a range trading strategy should be used or not. According to the logic of technical analysis, volume precedes price. To confirm any trend, volume must first increase in the same direction as the trend. Therefore, with the upward or downward failure of the support and resistance lines of the sideways and neutral market, the volume and then the price should change significantly. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.